Hi, good morning, everyone, and welcome to the NWR Vantage Point Conference. Before we hear from Tim Livy, CEO of Qoria, formerly Family Zone, a quick reminder to all participants, the format of today's presentation will be designed to be interactive. We'll aim to hear a quick 5 to 10 minute overview of the company followed by a Q&A session. We encourage the audience to submit anonymous questions via the Q&A function at the bottom of your screen, and we'll endeavour to have things wrapped up in today's session by about 8:55 a.m. So with no further ado, thank you, and over to you, Tim.
Great. Is everyone in, or do you think I should wait a couple of minutes? Wait a minute?
No, I think it's okay to kick things off. They'll probably come through. Thanks.
Thanks, Sam. All right, thanks, Sam. Thanks, everyone, for joining us so early on the East Coast. I'm currently in Charlotte on the East Coast of the US, counting down an hour until the Game 7 of the NBL Final Series. And I'm really pleased actually to be presenting for the first time under the name of Qoria, which is our new brand name. And you see some of our new livery here on this slide. So it's a pivotal moment. So in fact, I think this next few months for us is really a turning point in the company with a unified brand, a unified story globally, and the inflection point in our financials occurring at the same time. So let's get into it. So I've seen the names that are coming through. Most of you are familiar with the story, so apologies, but I will go through it. Qoria Limited, previously Family Zone. We're one of the world's biggest providers. We're probably the third largest provider of online safety and student wellbeing technologies. We are truly the only global provider with offices sprinkled throughout the world. We're dominant in the UK. We're dominating in the US. Growing very fast. I think in the last year we grew at 30% ARR. 13 million students use our technology every day, 24,000 schools, that's more than 100,000, well, it's way more, 300,000 teachers, and 5 million parents are using our platforms every day. So we are substantial, we are the real deal. Now, the thing that most interests investors, obviously, with these kind of off-risk times is, are you sustainable? Where are you at with your cash flows? And then soon, I can foretell the next set of questions is around EBITDA. So let's talk about that. So I've been telling the market for a while, it's somewhere between 90 and $100 million of ARR, kind of middle of that range where a break even. You see that quite clearly in this chart here on the bottom, on the right, which shows our fixed costs in the green and the purple, and behind that, our margin, the gross margin, the contribution from our customer base. As you can see, it's at 31st of March, it's something like $4 or $5 million behind. So if we can add 5 or so million of ARR this quarter, we're at that run rate break even. So we're covering our operating costs. And I'm pretty confident we actually ended the March quarter with $11 million of weighted pipelines, over $20 million of deals in the pipe. So we've got high confidence, and that excludes actually some very big kind of statewide type of opportunities that we're involved in that are hard to predict. So we don't put weightings on those. But so on a we're very confident of breaking through that cash flow break even point before 30 June. And just to make that to make that very clear, what I'm talking about there is in the next 12 months from that break even point, we'll be sustainable, have sustainable cash flows. So we're essentially there now or thereabouts. We've got very stable fixed costs. You can see that in the green and the purple columns here. Strong margins, our gross margins about 80%, and our service margins, the difference between service and gross margins is marketing costs, and that's nearing 90%. So we've got a very enormous amount of leverage in our business. If we can keep our fixed costs stable, every dollar of additional revenue that we adds at least 90 cents to the bottom line. And something I'll touch on in the next part of this presentation is this enormous a range of opportunities. I know investors are very focused on cash flow and profit, but I do want to touch on the scale of opportunity that's in front of us. Okay, the other aspect of the inflection point is that now I believe that we're really in a good position for the capital markets to start properly valuing us. At the moment, the markets really just see us through the prism of capital raisings and being cum raised and so on. And I feel like we'll get through the tax selling period of the June quarter, and we'll get into the next year where we'll be punching through 100 million of ARR and generating a lot of cash. As everyone knows, the September quarter and the December quarter are big cash generating quarters for us. So I feel very confident with the news flow. The reason I'm in Charlotte right now is because I'm putting my team's beat the flames, if you will, on budgeting, so that by the end of July, I can be talking to the markets. I'm planning to be very active, speaking to the capital markets from July, talking in a very confident way about the future of this business, in particular around cash flow and profits and so on. So I think that the concerns the markets had about cash flow and balance sheet will really be a thing of the past for us, and I feel like that's the point of inflection. And the purpose of this slide is to really show what a lot of analysts, BW Equities, the guys at Hartley's, Euros, the guys at Shaw's, are all saying essentially the same story, which is we are massively undervalued against our peers, and it's unfair. And maybe it's my job now to start talking to the market about why that's wrong. So I feel like that inflection point, that turning point, that re-rating point is very soon. As you can see here, we're clearly undervalued and have all the things that the market might be concerned about. I'll very clearly be able to spell a solution for in the next few months. Okay, so let me just give you the next five or so minutes on why I'm so excited about the future of the business. And then we'll get into questions, then Sam will take over questions. So what you see here is the way that we now describe the suite of products that we sell. We are intending to own the digital safety and student wellbeing space globally. And the diagram here, or the image here, shows how we link all these products together. And the language that this slide uses, we call it the wellbeing framework, is using the language of schools. And schools talk about prevention, intervention, and education. They're key concepts in really any kind of risk management situation, like security and like safety and like student wellbeing. And you can see how our personas, the people we sell to, and our product set sit around that. And this has become really important for our business as we've moved beyond just the IT person, guy or girl, who's responsible for risk management and SIPA compliance and filtering. Now we're talking to people who are concerned about the brand of the institution, about learning outcomes, about the well-being, the happiness of those children, those kids in their schools. And so we need a methodology to explain all the suites of things that we sell and how they fit together, and make sure that we're not in this and we sell this and we sell this and we sell this and we sell this sort of mindset, which would be the end of our business, because that just doesn't work in enterprise sales. So now let me quickly run through our products, what kind of product segments, industry segments, and I'll tell you why I'm so excited about this business and where we're positioned. All right, protection is the new name that we're using for, I guess, the Trojan horses of our business, the commoditized parts of our business that get us into schools, and that's content filtering, firewalls, and digital classrooms. We've got the best content filtering technology in the world, hands down. I'll fight anyone on that story. And that's the reason why we've gone from 0% of US schools to 18% in about 4 years. Our suite of products across Custodio, Smoothwall, and LimeWise, which are our former brand names, is literally unparalleled. That marketplace in the technology-enabled learning is growing enormously fast, at 18% CAGR over the next 10 years. The filtering side, the compliance side of our business is required by law, is well-funded, is easily growing at 15 to 20% year on year. So if we stay still, we're going to be growing above market kind of expectations. So our core business, which gets us into schools and allows us to upsell into other products and access parents, is very well-funded. And we've got the outstanding products, particularly in the filtering and security space. And I might add that outside of the English-speaking world, it's completely white space. No one does what we do, and some of our competitors do Lightspeed, SecureLink, GoGuardian, and so on. So we are the only one in our industry really positioned to start thinking about the non-English-speaking markets, which we're starting to do now. Okay, intervention. So this is an area of our product portfolio that came to our business when we acquired Smoothwall a year or so ago. And this goes from real-time monitoring of kids who are at risk of bringing a gun to school or killing themselves, where we literally save a kid's life every 3 hours, to check-in systems and student engagement surveys, which I'll talk about in a moment, which provide an early indicator for school that there are challenges in the well-being or the happiness of kids. So in intervention, this has been driven out of the UK with legislation called KICSI, and in the US, it's exploded with things like the Uvalde shooting in Texas. There is the amount of interest in the mental health implications, I guess, of COVID, post-COVID, mental health issues associated with social media addiction and gaming addiction. There's enormous concerns around the health, the mental health of our kids, and it's well founded because kids are unfortunately harming themselves at alarming rates. The suicide ideation rates have grown by more than 100% in 10 years. So enormous amount of funding is being brought into this space, and it's low penetrated, less than 20%. Something around 20-25% of the UK, US markets have these sorts of intervention tools, these monitoring tools, and we have the best product. We call it Monitor, and we're only 2% of those markets, the US and UK market. So an enormous amount of white space opportunity for us and our competitors, I might add. And the US and the UK is something like a $500 million opportunity that's about 20% penetrated. And I feel like within 2 or 3 years, that whole market will be penetrated, and I want to be, the leader in that space. Right, the next aspect of intervention, again, is this early identification of problems. Kids eating before they come to school, girls worried about their body image in junior school. These are the sorts of things that our Pulse technology detects through check-ins, gratifications, and student engagement surveys. This is a nascent industry, as you see here, something like 10% or 12% penetrated in the US and UK. It's quite new. But again, schools are super interested in stuff that supports educational outcomes and well-being. The happiness of a child is very clearly correlated with educational outcomes. Funding is just unbelievable. I mean, in particular in the US, the ESSA funding, there's $122 billion of funding, which is specifically available for schools and school districts and states to pursue the things that this sort of technology is about. So low market penetration, heaps of funding, clear needs, schools very motivated. There's an enormous amount of white space in this area for us as well. Okay, and engagement. This is a broad suite of solutions that we offer, from education, parent nights, child education, teacher professional development, all the way up to our parental control product called Custodio. Let's talk about parental controls to start with. So we've got about 5 million parents using our products today, about 400,000 pay for it. That parental control market is large, in the billions, and it's growing at 12% year on year. So it's big. The challenge with parental controls is, how do you access parents who are busy, intimidated, they get to the problem too late? The best way that we've found to do it is through schools. That's everything that Family Zone did in the last few years, is doing that through Australian schools, and we're now taking that with the Custodio product, which we acquired last year, into the US market in particular, and we're starting to dabble in the UK market. So we've got the best parental control products. We've got the leading cyber safety experts in our business, providing content services and enriching, or we call it upskilling, the whole community. This is a really exciting area for us, and it's something that investors should know that we own. None of our competitors are focused on this engagement education space like we are. It's the thing that will, I think, make us very different in the market, but it's the thing that also makes us very sticky in our school communities. So I'm super excited about the opportunity of engagement. Look, that's it. That's very quick presentation. Maybe I'll hand over to Sam.
Great, thanks, Tim. That was good. I think, as you correctly guessed, there's a couple of questions coming through on cash flow break even. Select Australian companies have been rewarded for illustrating a path to cash flow break even. Qoria's current valuation seems to be reflective of some uncertainty. How comfortable are you around the progress this quarter against previous expectations?
Yeah, very confident. So the run rate break even, so that's again making sure that the margin that we get from customers over the next 12 months covers our fixed costs. Yeah, very confident by 30 June that we'll have that done. And in the next half, I think anyone who's familiar with our story will know that it's a big cash generating half. So we'll definitely generate material cash flows in September and December. We'll be printing cash for the December half. We've also negotiated on the final stages of negotiating a debt facility, an accordion type facility that deals with some con notes that we have on the balance sheet and gives us some capacity to maybe, dare I say it, do some corporate things if the opportunity presents itself. So no, super confident on the cash flow. And now, in fact, our business is starting to talk mostly about EBITDA. One thing that investors should know is that we, unlike many of our peers, we don't capitalize R&D costs. So what goes through our P&L is raw cost. And on our current projections, we're thinking kind of end of 24 financial year, around about that time, certainly the September quarter 24, we should be on a monthly basis EBITDA positive. So we're not far away. Now, if we were capitalizing R&D costs, we'd probably be profitable, EBITDA positive next financial year.
Okay, great. Thank you. If we think about emerging technologies such as AI and machine learning, are you incorporating these to enhance the product, or do you view these as a threat to the business?
Man, they're everything, aren't they? Look, as a concerned citizen who's worried about my kids and the millions of students that we look after, I'm super worried about generative AI. This technology can already simulate a person, and that person can then form a real relationship, what's felt like a real relationship with kids. We know that happens today in things that emulate things like OnlyFans and so on. Like that stuff's frightening. How our kids whose cognitive abilities don't really, reach adult status until they're 25, 26, how they're going to handle that level of fakeness, and that worries the hell out of me. And we're seeing it from a security perspective as well. Attempts using generative AI to go after our financial situation. So, yeah, that's really worrying. Internally, we're quite active. We have our CTO runs a program seeing how we can bring generative AI into our business. The main thing we're doing at the moment is using it to improve our data system. So the way that we categorize the internet, the way that we moderate. So we've got 40 full-time moderators, for instance, in Salford, in the UK. We believe through AI, we can improve the efficiency of that group by about 70%. So that means that we should, with the same number of bodies, we should be able to more than double our business in the safeguarding part of our business. So it's a constant conversation in a company like ours.
Okay, great. Thank you. How does your technology differ from its competitors in terms of effectiveness and user experience in particular? And how does that translate into market advantage?
Yeah, well, I could talk to you about this for hours. Let me start. Maybe I'll follow the flow of my previous presentation and go through that. So with our protection portfolio, filtering portfolio, we've focused, in fact, we've been acquiring companies over the last 5 years to ensure that we have a solution for all the problems of a school. Our business model is to get into as many school districts or UK MATs as we can. And that means sometimes we have more, in fact, often we have more technology than our competitors. Our competitors think about education and the filtering side of education as a commoditized low margin space. And so they're going to limit the products that they sell to maximize their yield. They're all PE backed. That's how they think about their businesses. So, for instance, we're the only one that provides full cloud, on-device, in the cloud, and on-prem filtering holistically, and all completely unified with handoff, with delegation to the teachers and delegation of filtering control to the parents. No one in our industry has that breadth of technology across all the device types and operating systems that might find their way into schools. We're the only one that does that because, again, our business model is a little bit different. We're trying to open up schools to the entire community, to sell products to the entire community. The other thing that we've done brilliantly is that we can integrate into school systems better than anyone else. So the opportunity of the IT person in a school is, well, we solve all of your problems like no one else, and we integrate your systems better than and easier than anyone else. And from time to time, we'll make you look like a hero by saving your life. And that's literally how we sell our products. So our filtering, protection portfolio is unbeatable. Literally, it's unbelievable. Our safeguarding product, backed by English trained counsellors in the UK, is astounding. When you're talking about saving kids' lives, quality really matters, and school districts will pay a premium to make sure that there is a trained person at the end of the line who handles that incident, that what we call a capture. Our moderation product, in the fullness of that product, is unbelievable. And then Pulse, the more recent addition, is not technically more advanced than any others, but it's been designed quite brilliantly. Engagement in those sorts of tools is the key. How do you make sure that kids keep using it? And so our team are very skilled at designing tools that kids want to use. And the final piece of the puzzle, I think, is parental control product from Custodio, which we acquired last year. Custodio understand parents better than anyone else. It's not a technical innovation, but they have a fastidious focus on a unified experience across all platforms that's intuitive. Any of the investors on this call that have used the Custodio product will know what I'm talking about. So look, that's probably the best and quickest summary I can of our competitive advantages.
Okay, great, thank you. Just turning to the balance sheet, are you comfortable with the current balance sheet, including debt position, to execute on your growth plans and profitability you've outlined?
Yeah, very much so. Again, I'm here in Charlotte. The business units are all, we've set their expectations of what they need to hit for us to hit these cash flow and break-even targets, and now we're kind of negotiating the finer points of who gets what allocation. No, very confident.
Okay, great. You've talked about filtering product in non-English countries. Presumably that involves hiring new headcount. How are you balancing the cost associated with entering new markets versus focusing on your high growth existing US and UK markets?
Yeah, look, so we're not, we won't be doing anything meaningful in terms of costs in these non-English speaking markets in the next 12 or 18 months, in truth. We are leveraging the fact that we've got, for instance, a team in Spain with Custodio to work on some opportunities with international schools and developing Spanish language support in our product. So within our existing team, we can quite comfortably handle international schools and Spanish schools. Spain's a really interesting market, actually, because in many ways it's organised like the US. So we feel quite confident that we could deliver a great experience once we've got multilingual support in that market. So yeah, investors shouldn't be worried that we're going to be going out spending big money to open up offices across the globe. That's certainly not the way. What we're doing is proving within our existing cost structure that, in particular, Spain and international schools work. And from there, we'll work out what that next step is. My feeling is it's going to be mostly through telco distribution, so partner sales, partner-driven sales outside the English-speaking world.
Okay, great, thank you. And maybe just one last question. Can you just elaborate on any recent partnerships or collaborations that might contribute to growth? And you've touched on a couple of recent acquisitions. Can you just talk to how they've gone in terms of integrating with the business overall?
Yeah, okay. So first on partnerships, I think that question, if it's come from investors, probably alluding to some big kind of deals that we're working on. So we're working on some deals with some states in Australia. We're tendering things nationally. We're working with some states in the US. Those sorts of opportunities are big and binary and political, and we're not really geared up for these big enterprise type sales, but we're putting a good foot forward, and because I think we've without a doubt got the best products. So look, we're pushing really hard, and I'm hopeful that some things like that will land in the coming months. In terms of the progress on acquisitions, the Custodio in particular has been brilliant for me, because it means that we can dedicate a group of people to a particular product stack, and they're not going to get corrupted. Maybe that's not the right word. They're not going to get subsumed into the massive size of our education business. So Custodio is doing well. It's beating its targets consistently, or almost metronomically. It's just a fantastic business. Very agile. They're responding to the needs of our US school customers as we're going through the B2B2C trials. So brilliant product. The Pulse product, which we acquired, the most recent acquisitions from Educator Impact, best launch ever of any product in the Smoothwall business, which is our UK operation. That business, I think they've got £500,000 or £600,000 worth of deals in their pipeline now. I mean, it's unbelievable how that UK market is really diving into wellbeing. So super excited about those two. I mean, all of our positions have really contributed. Smoothwall kind of leveled us up. And EI and Pulse kind of rounded out our wheel of product sets. So we've now got that full complement of products that we need.
Okay, great. I think that's about all the time we have for questions today. Tim, if you had any other closing comments, I'll pass it back to you.
Oh, look, I just think, firstly, I would like to thank everyone for their patience. This has been a long journey, I think 6 or so years now, to bring this product set together. I feel like we're now a real company. This is a new dawn for us with the full complement of products, with an outstanding team. moving into a new brand, moving into a new financial year, where we'll be generating cash. So look, it's a really, really great time again. Thanks everyone for their patience. I look forward to being very active, talking to investors from July as we get through this financial year and we enjoy the fruits of our success and labours. So thanks everyone.
Okay, thanks everyone for joining today's presentation with Qoria. That completes today's session. Thank you.
Thanks, Sam.